Chris, just for our retail traders here, it's now their opportunity to tap into this stock, especially as the institutional investors had gobbled that up. It was oversubscribed, 540 million of over allotment. Even what would be the price to be entering right now? Are we supposed to be waiting for it to break down further, or at the IPO or a slightly higher might be a good time to be investing?
Well, I mean, depending on your goals, really, or your investment appetite, if you're in for the long term, getting in at these prices to me, I think is all right. But of course, if you can get it cheaper, the better, right? Now, if you look at the trading on the stock just yesterday, uh, the broker that they assigned to do their stabilization was UBS, and they were the top buyers of that stock. Now, they have not disclosed whether all of the buying from them was for the stabilization, but if it was, then they've already used about 5% of the proceeds for the stabilization. And usually, companies allocate at least 10% or a maximum of 10% for allocation. So, I mean, for stabilization. So, uh, I would suggest waiting at least a week because it's really
Okay.
too soon to tell how the what the trend's going to be for the stock. Because the first week it's always going to be very unpredictable because they're going to there's going to be a stabilization fund in there that's going to support it, and then on the other hand, there's going to be some investors that are going to want to trim their position. Let's say reduce it by 20% just to raise the extra cash. So I would suggest waiting at least a week or two, and whatever the price is, whether it's more expensive or much cheaper in the next couple of weeks, that would be a better entry level.
The pricing was already significantly discounted from their initial guidance. It was above 17 pesos initially. That's how much they wanted to raise. What does this matter when it comes to valuation? Does it mean that these valuations are more fair, or is there much more upside to be gained because of this discount? Are their plans overly ambitious or completely achievable?
Well, in terms of the valuation, I think at the original price that they set, which is 17.50, most people were concerned that it was way too expensive, especially right now. But even at current levels, there's still some concerns that it's trading higher than its industry peers. I mean, if you look at the ratios, they will say that it is more expensive now. I don't trade much based on the ratios, but for those fundamental investors that really look at that, that's a really big thing for them. So reducing the price did allow these investors to get comfortable. Although, in terms of whether it can go back to those valuations anytime soon, uh, uh, there's more doubt than optimism on it. Now, regarding those ambitious growth targets that you mentioned, um, honestly, I I really I'm really struggling to see uh, how they will enact these ambitious targets. Like you said,
Okay.
um, when it comes to the local staples like the biscuits and the noodles, they're growing at about 1 to 2, maybe 3% every year. So that really isn't going to be a huge growth factor for them. The more exciting part of the business uh, was their investment in the alternative plant-based meats
Mm-hmm. Corn.
sector. But if you look at the revenues on it, it looks like they've plateaued since 2018. They're the number one brand in the UK, but they've struggled to really get a hold of the U.S. market. In the U.S., I think they hold about 5% market share, and they were pretty honest why. The U.S. market wants plant-based burgers, and their product is like a chicken substitute.
How does this affect the other players? Which ones are you looking at when you're comparing valuations? The only thing that comes top of mind is URC, but will this affect other index players as well, especially as it might also be a candidate for an index, for the index?
Yeah, so definitely what you can compare it to directly is URC. Now, this is another major food manufacturer. Um, we all saw how food manufacturers have outlasted this pandemic. I mean, it was one of the bright sectors last year. Now, we didn't see a lot of growth, but at least they were able to maintain those revenues. Now, in terms of valuations, um, they're saying that it's more expensive than URC because of when it comes to earnings. So I don't think we're going to see a massive fluctuation in terms of moving out of one stock and moving into this one because companies like this, investors that get into companies like this usually already have it allocated. I mean, it is a pretty big deal that we have another major food manufacturer. It's a great addition to the stock exchange, and like you said, we may see it end up on the main board. So yes, I think investors are already loaded up on this. Most will not appreciate if it goes down in valuation. So we'll just have to see. So far, it's looking good to me. This is a good long term position or investment that you might want to get in. Mainly for companies like this, investors rely on dividends. So we'll just have to see.
Timing of this IPO in the middle of a pandemic, will this lead others to follow? And also, just a quick note on those net foreign buying that we've seen. Will those investors be staying in the market, or will we be seeing an exodus as they start to maybe offload?
Yeah, so we have been seeing net inflows in the last, I'd say maybe couple of weeks, but it isn't massive. It isn't massive foreign inflow. So I think this is them reacting to the rally that we saw last week. I mean, the index saw its best week going all the way back to October, and that probably drew some excitement from foreign investors. But it's gonna be we're gonna need to see a lot more for it to be significant. Now, what was the other question, Ben?
Would
Sorry.
this lead to other IPOs coming in?
Oh yeah. Okay. Yeah. So um, with regards to other IPOs, right now, especially, we need to really look at. I mean, companies will only do an IPO if they have really, really ambitious growth targets, which is highly unlikely, especially because of this business environment that we're having. I mean, very few companies are willing to take the risk, and even if they wanted to, um, the alternative is to take up a loan from a bank, which are lending out at very low rates, lowest in recent history. But because of the bank's tighter, tighter,
Risk
uh,
aversion.
exactly, that nobody's wanting to loan out. But they're gonna need. It's not gonna be easy for a company to just come up and say we want to do an IPO.
Okay.
Monde really, in my opinion, pushed back the IPO as far as they could. They've been talking about this IPO for 3 or 4 years. They
Right.
pushed it back because they wanted to grow that alternative meat business. They were expecting it. They were waiting to see a really big push into that sector globally, but it just hasn't happened. Now, because of this pandemic, I think because these products are more expensive, I think it's going to be tougher for them to realize that great value that they see in it.